Hello and welcome to The Enterprising Investor, the flagship investment podcast for CFA Institute. I'm Mike Wahlberg, and I'm joined today by Dr. Feifei Li. Dr. Li spent 17 years with Rob Arnott's asset management firm Research Affiliates, running research and then investment management before wrapping up in 2022 as CIO for the company's $120 billion of AUM. It is on her work as CIO of Kavout Algo Financial, though, that we're going to focus our time today. Kavout is developing an AI tool to help the investment research process. I'm looking forward to hearing how it works and what it means for the future of research. Welcome to the show, Feifei.
Thank you, Mike.
Feifei, maybe start us off with a bit of your background before you pivoted to fintech.
Oh, absolutely. So I'm always an investor myself. I graduated from China, Tsinghua University with my bachelor's degree in financial economics. And I came to this country. I studied at the University of California, Los Angeles, to get my PhD in finance. After that, I joined the Research Affiliates, which is a Newport Beach, Southern California-based asset manager, where I basically applied my knowledge from school to stocks, to asset classes. As you mentioned, before I left the Research Affiliates, I was serving as a chief investment officer of their equity strategy, leading the research and strategy design that support the company's systematic active strategy as well as the smart beta indices.
So what prompted the change over to looking at AI and fintech?
Sure. The answer will involve several aspects. I think, first of all, I had a great time at Research Affiliates. When I joined the Research Affiliates, it was a startup company, and I have learned so much. I had a great ride together with the company. On the other hand, Research Affiliates is very famous for its value investing. Rob is a big believer of buy low, sell high, which I think is a very legit investment approach as well. But on the other hand, when I look at how the investment landscape is evolving over time, especially I think pandemic really changed the participation of stock market investors. Prior to pandemic, U.S. typically is an institutional dominated space, U.S. stock market. And from pandemic, the retail investors started occupying a very big share. The trading activity from retailers can be more than 1/3 or sometimes 40% of the total market trading volume. That does change the market dynamics. And I believe, the bull bear market, the cycle has been changed as well. So in order to harvest, the premium coming from value investing, you need patience. You have to wait for the entire business cycle to come out to get your premium. On the other hand, the cycle becomes much longer, much more prolonged versus the history. So now you can have 10 years bull markets. If you only stick to value investing, it's my personal belief that you could leave lots of other opportunities on the table. And AI, artificial intelligence, is basically developing really, really fast. And there are ways you can utilize those new technology, new techniques to create, better investment outcome for the investors.
So tell us a bit about what Invest GPT is and kind of what it's trying to do.
Okay, sure. In a very short summary, I think Invest GPT is just a artificial intelligence-based research solution for the investment community. I view that as my research assistant. It's AI research assistant, which can help me gather information pretty effortlessly from the ocean of data, filings, documents. And one step further, Invest GPT can also conduct analysis, which help me to form my own portfolio.
So I want to get into kind of the nuts and bolts of kind of what it looks like. But off the top, can you describe a bit, who are the users for this?
Oh, sure. There are actually, I think, 3 types of users. When we look into the questions users really come up, we could classify them into 3 different groups. One, the first type is an information collector. It's more like myself. I'm an old school buy and hold investor. I have a very long-term orientation, and I don't trade very much. But I love to get information, let's say macroeconomic data, such as inflation, such as the election, such as federal policy, international trade, or even geopolitical tensions. And I want to understand the impact of those events on the markets, on the sectors, or even on individual stocks. So Invest GPT does a fantastic job to collect those information and summarize for me. So it's really helped me to digest information in a most speedy way. The second type basically are traders, individual traders, retail traders. They love to get financial information of a company. They love to see the ratios or technical indicators. They also use our sorting and screening tool often, to come up with, their own list of stocks for trade considerations. And the most frequent question we got asked from this type of investors are price targets. What's your prediction of Apple stock price in a month or in a quarter or by the end of 2024? So we get those type of questions very often. I know they are interested in trading those stocks.
So if I could interrupt just quickly, Feifei, because I'm just thinking about the data for this. So you ask a question of Invest GPT, it goes away, it comes back and says, here's what will happen to the S&P 500 given the outlook for interest rates for the next year, or here's the target price for stock XYZ. What's the basis for that data? Like, how do you verify what it is? And if everybody's asking the same question in the prompt in the same way, they're all going to get the same answer. So how do you use it to get an answer that's different than consensus?
So that's actually a great question. It's also something we are working on to improve. Right now, the Invest GPT basically, I think, is an outcome of merging several very powerful searching engines and also utilizing large language models such as GPT to provide investment-related information. Right? So basically, our answers often come from, searching results. Of course, we also have supplemented the GPT tool with financial data, and we use agentic tech to keep information up to date. So from there, we get, financial analyst forecast, et cetera, et cetera.
So you can get consensus, you can get broken down by analysts, that kind of thing.
Correct. Yes. There you would be able to access consensus, get press release of what other people are saying. But we are also developing internally about our AI-based forecast model. So in the near future, hopefully we can roll out that particular component, basically give people our own model-based forecast.
Gotcha. So you've got sort of the general knowledge seekers, you've got the day traders, the DIYers. Do you see an institutional interest in this, either sell-side analysts or buy-side?
Yeah, absolutely. So that's a third type of users I can see. Those are analysts from both buy-side and sell-side. I think those analysts often are tasked to write reports for stocks, for sectors. So Invest GPT actually offers them a really solid ground, a great base to start their own writing.
We had Morningstar CEO Kunal Kapoor on the show a few months ago, and he described how they were using AI to replicate their analysts' work. So effectively scaling the research process they undertake to apply those scores, but to more funds, in theoretically infinite number of funds, I guess. Do you see this consulting role being affected by this type of tool? Like you're describing stock selection, maybe asset allocation, but, fund reviews and sort of asset manager assessment?
So I would say artificial intelligence is impacting our day-to-day lives on the investment side for sure. It will replace certain work, but I would say it will start first replacing the very manual, very labor-intensive and time-consuming work. I recall, those are easiest to be replaced as well. When I was working as an intern at a large bank in China and also at an international accounting company during my college years, I remember I was asked to manually input data from hard copies to the computer to Excel spreadsheet. So this type of work will be eliminated in the future. I think thanks to the development of natural language processing technology. And this won't be missed. At least, I didn't feel I have learned much from those experiences other than improving maybe my keyboard skill a little bit.
Yeah, I still have nightmares about my investment banking days, sitting with 6 annual reports in front of you from 3 different companies and you're modeling up some M&A strategies or, potential merge models for these guys and inputting 5 years of data for, each of the, it was a disaster. It was, it took so much time.
Yeah.
And definitely I can see that being a benefit here. But
Yeah, likewise, yes. And I would say even some level of simple screen based on, let's say, well-known quant factors or technical indicators, those type of job used to be done by very junior research analysts. And now it can also be done by AI tools such as ours. If you go to Invest GPT, you can actually create a screen for stocks based on, let's say, 1, 2, or even 3 layers. For example, you can ask the Invest GPT to give you large technology stocks with a positive return over past the 12 months, price to earning ratio below 40, earnings per share below 20%, etc. Then you will be able to get a list, right? So this type of work is also will be replaced by AI. But I think the good part is analysts can shift their focus away from things that are relatively repetitive and give them little room to grow into things much more challenging and intellectually interesting. For example, I think, lots of when I was working in the institutional space, I certainly know lots of companies are trying to define their own signals, which is associated with future outperformance of certain stocks. Right? Those information are proprietary, and there's no way we can code it up because that are those institutions' secret sources. And the other part is about, customization. Large institutional investors like to define their own starting universe. They have certain concerns on the ESG front, environmental, social governance considerations. So the data to calculate those metrics can be inaccessible to the public. So you cannot really depend on more like a relative general purpose investment chatbot to perform this type of jobs. And also, there are complicated methods to construct and rebalance a portfolio. Often this involves weight determination, more thoughtful, sophisticated rebalancing technology. Recently I had a publication on Financial Analyst Journal about rebalancing, about how to limit your turnover, but focus on the trades which have greatest impact on the portfolio performance. Those type of things cannot be done by a chatbot either. It requires lots of thinking behind it. Actually, researchers can really apply their knowledge to be more creative and come up with new solutions.
Yeah, and then for those listening here that are interested in that, called smart rebalancing, and Feifei worked on that with Rob Arnott and Juhani Lenen Ma. Might be saying that person's name wrong. My apologies if I have massacred that. But that's an interesting piece. And if we have time today, maybe we could talk a little bit more about that. But it's so what you're describing is what I'm hearing, anyways. Is the Invest GPT or AI in general, as you see it, is allowing us to kind of go up a level and think more about the drivers, find better signals as opposed to trying to get in the weeds. And I mean, you do have your traders who are looking for technical signals, and I guess those would be those users. But for those who want to, figure out new ways to screen quickly, then it would come in handy for that. Another thing, I guess, that I was thinking about it as you were describing it, is just the ability to look through a portfolio as well. Obviously, given geopolitical pressures that are happening, clients are always wanting to know, Russia invades Ukraine. They want to know what is your exposure, direct or indirect, to either of those countries. Given tensions in the Middle East right now, a lot of clients are wanting to know exposures to the various different countries and players in that area. I guess I imagine that something like Invest GPT might be able to relatively quickly find those exposures across a portfolio. Do you think that's the case today, or something it's working towards?
Yeah, so that's actually our model today could offer you some partial answer already. So basically, if you ask let's say the geopolitical tensions impact on certain sectors, it will be able to give it to you. And also you could search, would Apple stock suffer from the tension between, U.S., China relationship, right? You could get an answer as well. And I think we recently launched a small module called the DocuQuest, which exploit large data science technology, not only writing style, natural language processing, but also other machine learning technique, and applied to companies' financial filings with the Securities and Exchange Commission, along with the press releases and other company documents. So because of that, users can ask a very detail-oriented question about a company and receive relatively precise answers. And that would actually cover the question you just raised about, because we could understand Apple's product revenue distribution, as well as the revenue distribution across geopolitical regions or countries. Right. So to a degree, you would be able to get that information.
So I've been watching Silicon Valley on my streaming service lately, and so it's top of mind for me. There in that series, they're trying to explain their product to their potential customers, and the customers keep coming back. It has an AI element to it, and their customers keep saying, "Well, Terminator," and everybody dies, and they jump to the end. And for listeners on this podcast, I've raised this question before. We had the head of risk management for FactSet on several months ago now, but this idea that when you remove those highly manual and entry-level roles, that the risk potentially is that the junior people never get the experience to become the senior people and ask those questions. What do you think about that?
Well, I think, junior people will lose the opportunity to do certain work, but the work could be nothing to learn from, not much to learn from, at least in my opinion. I think it's actually much better for junior people to focus their attention and the learning on things that are much more creative, right? When we talk about large language model, it's pretty much based on history. So what has happened has a huge impact on those models. But what hasn't happened yet will have a huge impact on our future. I think analysts can really shift their attention to something much more creative, much more productive, much more impactful for the investment community and for entire society.
What do you think are the natural limits on something like this? Like, what do you think it will never be able to replace in terms of human judgment?
Well, right now I think is still far away from replacing human judgment. And at least on the investment front, I would say MM approach is always preferred. Man and the machine approach. You do need a machine to improve your productivity and efficiency. On the other hand, you do need the man, the portfolio manager, or the financial advisor, or someone with the knowledge, with the expertise to monitor the outcome, to understand whether, the output is legit. So human judgment, in my opinion, at this stage is very, very important. But, machine can learn things on their own. Right now, I think we limit their structure. So even when we talk about quant model, we introduce machine learning elements. We allow non-parametric form kind of prediction model to be developed. But still, you have to specify your basic framework and structure. So that's the job for the model creator, for the portfolio manager. I think we still have lots of control over it. And I don't know, in the faraway future, I do think it's a possibility. I mean, terminators may come to terminate human beings. But I think right now, I see all the positive aspects of AI. And I think we should embrace what's happening and be part of it and hopefully do something good for our society.
When they get here, we'll have high Sharpe ratios on our portfolio. So we'll go out happy, right?
Yes. That will be bulletproof.
Yeah.
Wow.
Yeah. What do you see as the biggest opportunity overall in AI? And what do you think investors and users of AI are getting wrong about it?
I think artificial intelligence will have a huge impact on lots of aspects of investment. But when we stick to the most basic, the part which we can really articulate with rules, with logic, I think AI will basically penetrate from those parts first. Like I said, the manual data input process. And as a portfolio manager, as a former portfolio manager, I also noticed, in the portfolio construction process, we also have lots of people to check the quality of portfolio, right? To do quality assurance, to do data quality assurance. And those things certainly are very formidable. you could actually specify what are the red flags you would like to capture. So that's a part machine will do a better job as long as we code it up and have it done in a much more systematic way. It also actually reduces the risk of, one analyst leaves the job, nobody has a domain knowledge about what has been done previously. So I think that's where technology really kicks in and helps a lot. And the part, human creativity and intelligence is still important, is what we cannot learn from the history, is what we don't really know. I think we need people continuously working on that part and have more breakthroughs.
While I have you here, I'd be remiss if I didn't ask you to give us a little bit of a bonus pack here on your smart rebalancing article that you did. It came out in April, a few months ago there. So can you just give us a sort of a back of the envelope, what your findings were on that research into prioritizing transactions and how to rebalance in a smart way?
Sure. It's actually a relatively technical paper, I would say. It's not about fascinating signals which give you 20% outperformance over a cap-weighted benchmark, right? It's much more about in the portfolio construction process or in the portfolio engineering part of the world, what can you do to reduce cost, whereas still maintaining the efficacy of the portfolio. So the motivation of doing that paper is we, as a practitioner, we often observe the investment outcome from a live portfolio is different from the paper portfolio documented in the academic literature. And the gap, the direction of the gap is almost predictable. Live portfolio always underperform a paper portfolio. So we know it's largely driven by trading cost, discontinuous trading, and other market frictions. But on the other hand, how do we address those problems? So when I was working at Research Affiliates with my colleagues, we do notice smart beta factor strategies have those implementation shortfall. And we actually have delegated a team just to work on the portfolio construction approach. And we basically found, you could actually limit your turnover, limit your trading. If a stock, let's say you do value investing, you trade stocks based on price to earnings ratios, and the price moves a lot, it's a noisy signal. So you don't want to trade back to your target weights all the time because lots of trades would be costly and not really generating good outcome for your portfolio. So when you focus on portfolio turnover, you should really focus on the trades offer strongest impact of the overall portfolio characteristic.
So the biggest signals, the best potential payoff trades, focus on those and prioritize those.
Correct. Yeah, prioritize on the stocks with, let's say, biggest move in price to earnings ratios, right? If move into a higher region, you want to eliminate the stock. Move into lower region, you want to buy more of the stock, but not really on every tiny change, especially both directions. So the highest potential performance impact is the criteria you should determine your focus of the trade.
Gotcha. Well, thank you for that, Feifei. We're coming to the end of our chat here, unfortunately, so we'll hit you with the two-part final question here. What was your first job in the industry? And if you could go back and take yourself for coffee on your first day, what key piece of advice would you offer yourself?
So I still remember the first day I entered the office of Research Affiliates. I was full of excitement about applying my school-learned knowledge into a real-life portfolio. I think it was a great start for me. If I look back, 24 years ago, I could do better with today's knowledge, with basically a growth from like a fresh graduate school student to a more experienced portfolio manager. I would say I would maybe spend more time to learn what I didn't know. I think I was very committed into using my knowledge to make things better, but I could actually spend more time to expand my knowledge. So I think that's a part. If I look back, I could do better. When you are doing a good job at your position, you could think about what you could get, what you could equip to yourself in order to grow out of your position. I think that would be my advice.
I've been speaking today with Dr. Feifei Li. Chief Investment Officer for Kavout Algo Financial, maker of the Invest GPT tool, and author of the recent Financial Analyst Journal article, Smart Rebalancing. Thanks so much for coming on the show today.
Thanks, Mike. It's a great honor to have a chat with the audience. Thank you.
I'm Mike Wahlberg, and this has been The Enterprising Investor.